Hello friends, Chamber has given me a pleasant task of briefly explaining to you all the concept of appointed date, which is crucial for mergers and acquisitions, especially one which are driven through a NCLT scheme. To put it very simply, what is appointed date? One would understand that if you do an agreement for say transfer of business or even purchase of an asset, it would provide the date from which you would become the owner. That is the similar concept which is taken forward as appointed date when it comes to scheme of arrangement. So any merger demerger schemes which are either approved by NCLT or under fast track route by RD or as part of a resolution plan under IBC would carry appointed date as a point of reference, which would mean that from that particular day, the business, the assets of the say amalgamating company or the demerged company would belong to the amalgamated company or the resulting company. What are the consequences? This date decides the segregation of income and expense between the two entities. All the income and expenses prior to the appointed date belongs to the transferor company, and after the appointed date belongs to the transferee company. Why is this so crucial as compared to a normal agreement? Is because a court scheme would take at least 6 to 8 months, and therefore the appointed date is something which is pre-agreed, which may be a retrospective date. Say if I am filing a scheme today in August 25, I can still put say the appointed date as 1st April 25. I can put it as 1st January 25. I can even put it as 1st April 26, a prospective appointed date. So it gives a good amount of flexibility on what should be the appointed date. Couple of years ago, MCA has also clarified this, that if you put an appointed date up to 1 year prior to the date of filing, there is no problem. If you put it a future appointed date or a event linked appointed date, even that is workable. Like if the merger is linked to approval by the telecom authorities, then an appointed date linked to approval of the relevant authorities is also workable. So whatever we put in the scheme follows for Companies Act, follows for Income Tax Act as well, and also follows for accounting. Accounting, the point of control is considered under Ind AS 103 as per the MCA circular again to be more linked to the appointed date. What are the two deviations to this? One is your indirect taxes. Indirect taxes are more prospective in nature. They flow when they change from the date when the scheme is effective. That is after the approval of the NCLT scheme, when the merger is given effect to, only then the GST obligations come forward on the amalgamated company, for example. Till then the GST obligation is on the amalgamating company. Whereas for income tax, the income relates back to the appointed date. Say in our example it is 1st April 25. So even if the scheme is approved sometime in 2026, it is as if the income is deemed to be of the amalgamated company. And accordingly, the return of income has to be filed. If the time period has expired, now section 170A has been introduced so that you can revise your return. We also had Supreme Court in Dalmia to permit a revision of return before 170A. The new piece to this appointed date concept is insolvency. Insolvency resolution plan can provide for merger, can even not just provide for a issuance of share and taking control of the company. So then the question comes, what is the point of control? Then is appointed date concept, is it relevant or is it not? For that, if we briefly see what are the steps. Once a bid is submitted, it is approved by COC. Then it is approved by NCLT. As soon as it is approved by NCLT, the COC dissolves, the control moves from the RP. But many times the control doesn't go to the successful bidder. There is a monitoring committee in between for the period till the time when all the payments are discharged. The control is with the monitoring committee, and the control only translates to the successful bidder after, say, payment of all the upfront payments to be made to financial creditor, operational creditors, etc. In that scenario, one can defer the effective date, so to say, or the for accounting, and say that when all the payments are made, only then the scheme is to be given effect. Secondly, it is important in a resolution plan to get waiver of all the liabilities. Following the clean slate protocol of Ghanshyam Mishra, all the liabilities up to the date of approval of the NCLT gets waived unless they are otherwise provided in the plan. Therefore, appointed date in resolution plan is more forward looking, is preferably a date subsequent to the date on which the control has come, and only after that one would be accounting for the business combination in the books of the successful bidder. If there is a merger, it would be accounted as a business combination in the standalone books. If the separate entity continues, it would be accounted as a business combination in the consolidated financials of the successful bid. So friends, in all, appointed date gives you one has to summarize it, is a concept which permits you to decide the cutoff date from which the transfer happens. Though legally the transfer may happen at a future date, but for accounting and tax and company law purposes, it is deemed to have happened, say, on the first day of the year, and provides a lot of administrative ease on accounting and taxation, because the date being more static than being dependent on the date on which the scheme is approved by the NCLT. Thank you, friends. I would also like to thank Dhairya from my office who has helped me with this, and congratulations to CTC on their centenary year celebration. Thank you.